Are you buying a home for the first time ever? Well, then you've come to the right place, because I'm going to give you 8 strategies to follow. Hi everybody, my name's Ty Eden. I'm with Exit Realty Redefined here in Wheaton, Illinois. I've been a realtor for about 1.5 years, and I've been an investor for virtually my whole life. I work with buyers, sellers, and investors, and I'm sharing with you our 8 strategies to follow in this video series. Now, I'm not going to cover all 8 in this one segment. I'm going to cover 2, and then I'll have 3 more additional videos after this. So keep an eye out, watch this video to the end in order to get all the stuff that you want to get. In our previous segment, we talked about pulling your credit, dealing with credit issues, what your credit score breakdown really is comprised of, negative credit reporting, and what you really should do about it. Now in this segment, we're going to talk a little bit about getting pre-approved, shopping for lenders, beefing up your down payment, reviewing your budget, and saving up some money. Getting pre-approved is the most important aspect, well, one of many important aspects of going through the process of buying your first home. And the reason why is as you're out shopping and you're looking at homes, you may end up stumbling across that actual home that you really want. And so you're going to instruct your agent to submit an offer. Well, what makes your offer stand head and shoulders above others is going to be if you attach a pre-approval letter from a lender. And what that means is the lender has already pretty much run an application, you've submitted financial information to them, they've pulled your credit report, and you are pre-approved. Where in other examples, if you've been pre-qualified, that just means that they've taken a look at what you've stated, as they used to in the years past. Here's what I make, here's what my expenses are, and the lender does no checking of any kind, then they just pre-qualified you and you don't have as strong a leg to stand on, and nothing that you can attach to your offer to that seller on that ideal home that you want to actually buy. Shopping lenders. So you want to make sure that you're dealing with a lender that you're comfortable with, that you can communicate with, and that you understand all what the terms and conditions are of that loan that you're applying for. And why that's important is the letter that you get for your pre-approval is so important with your offer. So you want to make sure that you're dealing hopefully with an actual lender. And that's someone that's actually writing the check and that you'll be making your payments to for the life of the loan or for as long as you live in that home. There are those folks out there that are mortgage brokers who are going to package the loan, go through a lot of the upfront checking of credit, looking at financial information and so forth, and they simply hand the application off to the lender that actually is going to write the check to the escrow company when you're sitting at closing, when you find that actual home. The difference is there might be some miscommunication from the mortgage broker and the lender as the time period lapses, because once you're approved for a loan, doesn't mean that they're actually writing a check and putting it in escrow. You actually have to have a contract that you have to bring back to the lender and show, hey, we've got an accepted offer, we're ready to buy the house. When you do find that lender, make sure you understand all the terms of the deal, the fees, the interest rates, any kind of points that there are, the different loan programs that they have available as well. That's a very important aspect depending on how much you've got to put down on the actual loan itself. You know, do they have low interest? Do they have low down payments? Do they have FHA? For those veterans of you out there, do they do VA loans where there's no down payment required at all? Make sure that you know all of those terms before you actually commit to a specific lender. Now, our next and final point in this video segment is beefing up your down payment. You want to make sure that you've got a sizable enough down payment to put down on the loan. And the reason why that's important is because it's just like a car. The more of your own money that you put towards what you're purchasing, the less your loan is, the less principal that you get charged interest on, and the cheaper the purchase is over the life of the loan if you're going to live there for the entire life of the loan. You want to be careful not to put too much down on the house as a down payment, because you also want to have some cash on the side for once you move in for any after closing repairs, any deferred maintenance. What deferred maintenance means is You know, is there a window that gets broken and it needs to get replaced? Did a pipe burst unexpectedly and the insurance isn't paying for it? Did the toilet all of a sudden leaking and that wasn't discovered in the home inspection before you closed on the property? All those expenses are going to continue to go because a house, it's going to depreciate just like a car. Certain things are going to break down, and those are expenses that are going to come out of your pocket. So make sure you've got enough money for the down payment and you've got some cash set aside to be able to pay for any kind of unexpected repairs. And some of those repairs might be covered under insurance, but there's a deductible. So that's what I've got for you in this segment. Thank you very much for checking out my channel, and we'll continue this series in our next video. So if you are buying your first house ever, please stay tuned for the next video coming out, and there'll be one more after that. Thank you.